11 p.m. and we'll call this meeting in order. The meeting of the Board of Trustees on Wednesday, April 24, 2024. Looking at the agenda, looks like we have about 8 items to cover. Starting with the first one, which is public comment. Just want to take a moment to open the floor for public comment for anybody who may have something they want to communicate to the board.
Nobody signed up, so.
Okay, hearing none, we'll close the public comment period and move on to item number 2, which is approval of the minutes. Looks like we have 3 sets of minutes that we're required to approve during this meeting. One for our October 26th meeting, our November 29th meeting, and our January 24th. Any board members have any questions about the minutes, assuming everybody's had a chance to read them?
There are no questions. I'll move to approve all sets.
Second.
Okay, it's been properly moved and second. All that approve, please respond by saying aye.
Aye.
Those who oppose? Okay, the meeting minutes have been approved. Item number 3, resolution for investment management and banking signatures. Looks like we have some administrative matters to look into. Mr. Tyndall?
Yeah, so we've gone through the process now to set up our relationships and everything with Marquette and then the custodian bank, US Bank. Signed all the paperwork and everything. So the resolution really identifies those as having been signed, and if we need a corporate resolution in the future, if any investment firms or banking want to see it, this is a document we can provide to them. So that's the purpose of the resolution.
Assuming all board members have had a chance to read those, do you have any questions, or do we want to look at anything particular in the resolution?
I just got one question about that resolution, and really the next, it's a really general question. It's just because I just am ignorant to how these things, I see these, but how do we link up, Craig, like in terms of when we authorize you to have power of attorney for all these different things and signatures and all that? I mean, all this makes complete sense to me. They have to have somebody to call and say, hey, can we make a change or move money? How is the link between the board and you, and this is, don't take this anyway, I just don't want to know it, to kind of make sure that you're acting in the best interest of what the board is saying to do in that loop. Does that make sense?
Yeah, it does. And there's lots of different things. I mean, all the paperwork could be provided and can be reviewed by the board either before or after the fact. You have the financial report, obviously, that shows everything that's been done that we'll get each meeting. So that's helpful to see if anything major is gone around. The trust will be audited as part of our audit. So that's the big catch at the end.
Yeah.
Is you don't have the paperwork.
That's cool. I knew, I mean, this is obvious that it needs to happen. I just was wanting to make sure we've kind of got the tied, and obviously those questions don't come from me and you. They really come from some future board and some future you that's going to be here way down the road after we're gone, you know, so.
Appropriate controls,
good.
Absolutely. Yeah, makes sense.
Great question. Any other questions for Mr. Tyndall?
I have a question along the same lines, and I know we have great legal counsel internally. Do we have items like these? Do we have external legal counsel review these?
The resolutions, no, not external legal counsel, we don't. We haven't done that. I mean, if it was something extraordinary, we probably, and it had some degree of expertise that was required for it, then, you know, we'd go out and get that. But generally, for the resolution, we don't. It's our internal legal team.
Just curious.
Yeah. Good question.
I know with administrative matters, there's always different types of things that can come into play and cross folks' mind, like segregation of duties, too much authority for a single individual, and not proper communication. But one of the controls that we do have on the back end is the fact that we do get an audit that'll confirm that all the activity that's taking place is accurate and everything is, you know, documented as it should be. So. After reading through this, that's part of the reason why I find comfortable.
Yeah, I was going to say the responsibilities or the mission, I suppose, of the trust is pretty narrow too. So we don't have a lot of operating issues that a corporate board would have to worry about normally, and subsidiaries and all the other things that really would require a lot of oversight from the board standpoint. We're pretty focused and narrowed on what we do, and we get reports on a regular basis. So, yeah, I think I think we're hitting a good mark so far.
Greg, is there anything significant that you think you would have to do that you feel you may want to bring to the board prior to executing?
No, but if it is substantial, we probably do that either before or after. You know, for example, the contract with Tim and his folks, pretty substantial, but we talked about it and everything was set, so we were ready to go with that. U.S. Bank, we knew we had a custodian bank. If we hadn't have talked about it, we probably would have talked about it beforehand. So some of this was done after the fact. After it has been discussed, we've made the choice, and now you go to them and then they just flood you with a bunch of paper and you got to get signed somewhere. And we could run you down and run down the rest of the board and have a bunch of meetings over paperwork, or, you know, we went ahead and signed them. They haven't asked for it. This is just in the future if it is asked for, and for the auditors that we have it documented that authority's been granted.
Understood. Any other thoughts on this matter? It looks like we have to take action on it.
If there aren't any more questions, I'll move for approval of Resolution 2401.
Okay, it's been properly moved. Anybody want a second?
Second.
Okay, it's been properly moved and second. All those are in favor of approval, please respond by saying aye.
Aye.
Those who oppose? Okay, action has been approved. Moving on to item number 4, resolution for IRS matters. Mr. Tyndall?
It's kind of the same thing, only with IRS matters. We still are in the process of getting our designation for the trust, the 501c3. Of course, we're asserting that we're a 115 organization, so a municipal organization, which is a better place to be for us. But we want to get the 501c3. It's kind of belt and suspenders. Doesn't hurt us to have it. Doesn't take away the fact that we can still assert that we're a municipal, non-taxable entity. So as we do that, we need to file back and forth with the IRS. We may want to get a letter ruling at some time. So this just grants authorization to sign off on those process, get the information we need from the IRS. It designates somebody to be able to do that, go through that process with our attorney. That's the purpose of this resolution.
I'll move for approval.
Okay, it's been properly approved and second. Any board members have any questions regarding this action item? Okay, hearing none, all who approve, can you respond by saying yes?
Aye.
Yes.
Those who oppose? Okay, that action has also been approved. Moving on to action item number 5, Mr. Tim Burdick is here from Marquette, who's going to give us our review of our investments and portfolio. Mr. Burdick.
Thank you. Normally, what we'll do in these presentations, we'll talk about the markets. I'll provide a limited number of slides, correlate what's going on in the markets to what's happening with your portfolio, and then go through a performance report and explain how the portfolio has been performing. I don't have all of that yet because we're still in the midst of putting it together. In terms of logistics, the money moved over to U.S. Bank on March 21st in 2 wires. Total was about $53.5 million. We're working off the original 52 number, but you earned interest on the treasuries that you were in prior to. We let those mature, and on that following Monday, we moved the money over to U.S. Bank. So it was an additional about $1.5 million, which is great. So we received $53.5 million. About the next day or 2 days later, we made the initial trades. I'll walk through. It's in your book. We've laid out, partially based on your recommendations, a couple here at the last meeting, space it out, the investment over a 6-month time frame. So we're going to dollar cost average into these positions instead of, right away investing all $53.5 million. That has been to your benefit so far. It is obviously something I track. It's kind of my geeky way of the math, and I like to see if we're winning in these types of decisions. The market has been generally negative here in April. So you're still, as of today, you're still $30 million in cash. So you're still earning that 5.25, and frankly, that's done better than both stocks and bonds. So I'll recap just very quickly generally what's happening in the markets. Again, your portfolio really was in cash during most of this. But the markets have started off in a very positive light. The top set of bars is the U.S. Equity market, middle set of bars is international, and bottom are bonds. In the first quarter, the market was very positive, still felt that the Fed was going to lower interest rates times. Earnings were good. The economy was not going to have a recession. We're going to stay out of a recession for yet another year. The only negative were interest rates started to tick back up. And that's why the Bloomberg aggregate is basically the broad S&P 500 of the bond market. So it's the aggregate of investment grade bonds, and that's negative through the first 3 months because interest rates have ticked up. Interest rates have gone up because inflation, actually the next page is better, because inflation has gone away and is actually expected to accelerate. And the first quarter numbers come out, and that's on the far right. The black is advanced economies, the U.S. is in the light blue. You can see in the second half of the year, core inflation was a bit over 3%. It's expected to be around 4%. So the Federal Reserve, which is aiming for 2%, stopped raising interest rates, the Fed funds rate at 5.5%. The expectation was interest rates were going to decline this year, but now it appears these rates are going to stay higher for longer. And it's the most boring, ugly chart in the world, but it tells a lot. It's the dotted line is the yield curve. So interest rates on treasuries as of 12/31, and the blue line is 3/31. So you can see, with the exception of rate at 0, which is the Fed funds rate, interest rates have gone up, almost a parallel shift up during the first quarter. And interest rates go up, bond prices go down. That's why the aggregate index is negative for the first 3 months of the year. So you can also, it's what they call an inverted yield curve. Higher interest, or short-term interest rates are higher than long-term interest rates. That's not normal. And it's actually been happening now for the longest consecutive. We always like when we break records. On the far right, July 22nd through March 31st, and it still is inverted. This is the longest consecutive time frame that the yield curve has looked like this. So it's happened several times in the past, but it tends to be more of a short-term phenomenon. But we're rolling it 2 years and still going. The chart's a little misleading because between 1978 and 1982, for those of us who are around and lived through that, the Jimmy Carter savings and loan issues, the yield curve was inverted on and off for about basically 4 years. But in terms of consecutive days, we've broken a record with the expectation it's going to stay like this. So having $30 million in cash out of the 53 today, frankly, is a positive because it's going to earn more. We are going to leg into the bond managers over time, and I'll show that. We've made part of the investment. We're not going to try and time this. But being conservative going into it, the conversation, I think it was at the last meeting, was in the first year of implementation, it would be seen as a negative if we put all this money to work right away and all of a sudden the market goes down 20, 30, 40%, and you lose a good portion of the corpus. So by dollar cost averaging into it over the 6 months, you're reducing the likelihood that that's going to happen. So what it's causing, just finish up on this side, this is the number of Fed cuts that has been priced into the bond market. So actual dollars being invested in the bond market and bond futures by month over the last 10 months. And what you can see is there's just been a lack of consistency. They're just not sure what the Fed's going to do. So on the far right, they've knocked it down to about 2 Fed cuts this year. They're saying maybe 1 in September, 1 in December. But again, this is all speculative based on what they think the Fed's going to do, which is based on what inflation's going to do, which is based on what we think the economy's going to do. The economy is 70% consumer, and we are still out there spending money.
And the election plays into that too, right?
The election plays into it a little bit, not as much as it used to, because in the past, Congress had more ability and/or desire to make financial decisions in the year of an election that could move the economy. It's not good as an incumbent to have a recession the year of an election. But because of the current state and deficit spending, et cetera, they are, what we've seen over like the last 3 or 4 election cycles is the market is less correlated to elections than it was historically. There's still some playing around and there's still some volatility that exists as a result of it. But on the stock market side, last year was really the year of the Magnificent Seven, the tech stocks. This chart just simply shows so far this year, through the first 3 months at least, the expansion has been very broad. The market's up about 10%. It's not just technology. Technology is doing fine. And it's really, again, a third of the index. So it's a big piece of it. But with the exception of real estate, just about every sector is up, in the somewhere between 4 and 16%. So that's a positive that it's not just tech leading the charge anymore, that it is more of a broad rally. This is the Magnificent Seven. These are the 7 stocks that together accounted for 60% of the market return last year in the U.S. on the large cap side. I guess the Magnificent Seven is now maybe the Magnificent Two or maybe even the Magnificent One with NVIDIA. But what this is really showing is that that absolutely was the story last year. It's becoming less of the story this year. NVIDIA is doing wonderfully. Again, they're going to make the chips that run all the AI and are being priced accordingly. But you've seen a disconnect now between some of these other names, which is also positive for the markets, where it's based more on fundamentals and less on momentum. You are investing in non-U.S. stocks. Your policy limits you to 20%. The target allocation, you'll see in a minute, is only 10%. So you're going to be underweight international versus a lot of your peers, perfectly fine with that. One of the reasons is currency has not been working in our favor in the first quarter. As a U.S. investor investing overseas, those investments have to be brought back to U.S. dollar. So you have foreign exchange, you have currency risk. In the first quarter, that was definitely a negative. Where it was down based on the index 2 to 4%. You lost as an investment because the dollar was strengthening because interest rates were going back up. So it's something. It's one of sort of the hidden risks in the investment, or a secondary risk in an investment portfolio that you really don't see or talk about very much, but we know is there and adds a measure of volatility to the returns and to the portfolio. Again, it's going to be a little bit more limited on this because initially, at least, we're going to have that running at 10%. The international allocation, you're going to have 40% U.S. and 10% international. So you're definitely skewed toward the U.S. stock market. And this is part of the reason why I thought this was mildly interesting. Again, for geeks like me, earnings per share growth over the past 15 years. The U.S. is in the orange, the one that's far exceeded the other two, which are developed non-U.S. and emerging market. Our companies over time, if you go back and equate everything to 2008, are going up substantially more. And that's the reason why the U.S. market has outperformed the non-U.S. market by probably 8 to 10% over this time frame. So again, your positioning initially being 80% of your equity allocation is to the U.S. Is in part because, again, the U.S. stocks are sort of making more money.
Yeah, is there any specific reason why international companies aren't doing as well right now?
The main reason is we dominate in the tech side. This is the Amazon and Apple and Microsoft. And again, Microsoft and Apple each, if they were their own stock market, would be the 3rd largest stock market in the world. Each one of them. Because they're $3 trillion companies now. So just they're so large and they've done so well that it skews this type of information. One chart on you're going to, and in July we're going to make it. We put it off for a quarter because real estate hasn't swung back to positive yet. So we were going to make the investment into your real estate at the end of the first quarter. We're going to move it to we moved it to the end of the second quarter. The type of real estate you're going to be investing in, the four main areas, multifamily, industrial, office, and retail. And then you can see what pricing has done over the last year in each of those four sectors. It says at the top, office space is down about 31% across the country on average. The average valuation for an office building is down 30% from where it was a couple of years ago. And it wasn't that extraordinary, even a couple of years ago. On a relative basis, it was the worst of the four, even worse than retail. So again, you're going to have a 5% allocation into this investment. Timing of it, we're not going to try and time the bottom specifically, but being 2 years into this correction before the dollars go in is going to definitely be a positive. You're going to, you'll be going in at about 85 cents on the dollar. Even with the good manager, which we have lined up for you with Ballard. So, but again, you're going to do that as part of your real asset portfolio. Your other part of your real asset portfolio, which in total is 10%, 5 real estate, 5 infrastructure. So again, I mentioned before, we're at an airport, so it's a little interesting for me to say, but this portfolio is going to be investing in things like airports, seaports, tollways, things of that nature through JP Morgan. It'll be a 5% allocation. I just included this chart in part because it shows that regardless of where we are with inflation, regardless of where we are with the economy, with GDP, this is one of the few investments that has consistently been positive over the last 20 years. So as we try and speculate and have that correlation on the bond and stock side to what's happening with the economy, investments like this tend to be less correlated, uncorrelated. We're just getting income. We're working more and it's more global. So we'll be able to, we think, will be a nice ballast in the portfolio. So the initial allocation is $5 billion. That'll also go in at the end of the second quarter. So that is, in general, what's happened in the markets. Let me blow this up just a touch. This is the portfolio as of April 15th. We made that first tranche of investments on March 21st. We made 2 additional April 1st because they were monthly funds. So you can see now at the bottom it says $33.5 million in cash. On Monday we put an additional $3 million to work in the Fidelity S&P index. That's month 2 of that 6-month investment. So again, that's what I mentioned. You're at about $30 million in cash as we sit here this evening. Again, earning that 5.2%, which is great. So you'll see we're underweight in everything essentially except for private equity at this point, as well as the cash. But now about $23 million has been put to work. So you have about $8 million in bonds. With the additional $3 million trade of a couple days ago, you've got about $8 million in U.S., $2 million in non-U.S., $1.5 million in defensive equity. The first private investment was made at $3 million. So again, I don't have, normally I would show you performance, how you're doing relative to benchmarks, peer groups, those sorts of things. I don't have that yet because we're really just starting this. And it's a noisy, ugly spreadsheet, but again, just to provide, a look under the hood, this is our current to-do list for your portfolio. So by investment, by month, when each of the trades are scheduled to be made. And again, our general idea is not to vary from this unless something significant happens. We do, as a committee, review this specific implementation schedule once a month. We meet each week, but once a month we pull this up and we make sure and we re-vote and make sure we're comfortable with the next set of investments that are being made. Again, not trying to time things specifically, but we've done this over the years where there's been extreme amounts of volatility and we've decided to hold back and let things play themselves out a little bit. hopefully that doesn't happen over the next 4 or 5 months. So normally I'd have a bit more for you, unfortunately, just with the timing, et cetera. Just wanted to kind of give you a glimpse of what we've put to work so far, and definitely open to any questions.
Thank you, Mr. Burdick. Members, what questions do you have for him?
Is there ever a thought that you wait? They had Jamie Dimon on the news recently. He was talking about how high the interest rates could go. Would we ever, like, pause? I hate to ask a question that might be a stupid question, but
It's not a stupid question. It's not a stupid question at all.
Would you ever, like,
If
understand the dollar cost averaging?
Yeah.
But with things projected to,
if it really did come out that we thought the Fed was going to actually raise interest rates this year, we probably would pause on the bond side and let that happen. Right now, again, the market is still pricing in 2 cuts later in the year. So again, JB's coming out and speculating.
He's
on,
speculating.
Yeah, on what he thinks is going to happen, and that's fine. He's been right a lot of times. But in general, we want to get this money to work. And again, not trying to read the tea leaves and figure out specifically how to do it. And that's why your bonds are going in 4 different pieces, so to account for that. But again, still $30 million in cash. So, and that's really part of the bond portfolio. So Jamie Dimon would probably be pretty happy with this portfolio right now because you're still sitting 60% in cash.
When will our next deposit come in?
In July.
And how much is that one for? Is it in there somewhere?
Net, it's going to be $7 million. So we have July, that's why it's in the green. We've got $7 million in cash coming in July.
You've kind of got it pared down, 10 million, 8 million, 8 million, 7 million, so that'll just be at the end of the ladder?
Well, you see, in July, even though we've got cash going from 8 to 7, we have investments of,
I see.
yeah, 3.5, 7. We have investments of the 8 million going in. So that cash is really just the cash that's coming in at that point.
Got it.
Any forecast for 2025? When you rub your crystal ball, what do you see?
I think a recession's coming. If you predict a recession, you'll always be right. Just a matter of when. But this is just my 2 cents. My crystal ball has been wrong many times, but we're really riding on consumer and consumer debt right now, and that lasts until it doesn't. And there's usually a tipping point, which you don't know what it is. You don't know when it happens until it happens. But with the market pretty speculative, and with the consumer really, savings rates are very low. Credit card debt's at an all-time high. Again, the consumer's not in bad shape, but we are really spending a lot of money right now in keeping this going longer than most economists predicted. So I would think going into next year that some sort of mild recession, which again, we sort of thought was going to happen this year, is somewhere between possible and likely.
Don't order your Dow 40,000 hats just yet still.
I saw that article today.
Yeah.
We're getting close. Yeah, I mean, it's... there's a lot of good things going on in the economy. To Jamie's comments,
Yes.
the economy's so strong. It doesn't make sense. I mean, fundamentally, if you look at consumer spending, consumer savings, consumer credit card debt, we're 72% consumer driven. I make it a point, I spend a lot of time on the highway, the interstate, I make it a point to look at tags. There's a lot of paper tags out there. So people are still spending a lot of money. So, my research is anecdotal, right? I mean,
Right. No, but it's accurate.
It feels funny. Now, we're one of the few economies that continue to pump stimulus money into the economy 3+ years after the pandemic, which has doubled, if not tripled, our national debt. So we have a
Small
fiscal
issue there.
challenge,
Correct.
fiscal policy challenge,
Yes.
compounded with GDP growth challenge. I'm not screaming stagnation, but it feels uncomfortable. And I think we may still see some growth this year, but I don't know about next year.
Yeah, and it's picking, and we always think about this in terms of calendar years. It's tough to pick the moment, but you're absolutely right. It's felt like it should be coming for a while. But the momentum is just still there. You know, the price of concert tickets, the price of airplane tickets, cost of hotel rooms, it's all extremely high, but we're fine with it. We just keep spending the money. And history has shown we do, but we don't do it forever. And as I said, there's usually something, whether it's, I don't know if the election's going to be it, but there's usually some sort of event. So you look back and you say that was the time when the consumers decided to, not make that purchase. And you don't have to stop spending money, you just have to spend a little bit less to take that 2% growth off the table. So it doesn't need to be anything dramatic and overwhelming. It just needs to be a couple of percent.
We need 2 25 basis point drops. We don't need 225 basis point drops.
No.
That's the problem.
Correct. Yeah, 25 basis point drop is, that's symbolic more than it fundamentally changes really anything within the markets.
Yeah.
So. There's a range of analytics you can look at when you try to make market predictions and things, default risk layoffs. I think I saw Apple's laying off a bunch of folks here. Mm-hmm. Like you said, tags on cars. I've heard it all. And, spending does seem to be unprecedented. I'm part of the problem. I just bought 2 concert tickets that I thought were extremely overpriced and things like that. So I suppose at some point people are going to start
after COVID, you're just so glad to get to go. It's like whatever,
yeah.
Because after COVID, you couldn't go. So.
Exactly.
And they are, the behavioral finance people are having a great time right now trying to figure out the new consumer.
Yeah.
Because it is different than the consumer 4 years ago. And that is part of the economists always look at historical data to try and figure out what's going to happen next. And it's not working right now. That their models are broken a bit because, again, consumers are acting differently. And frankly, I think the coming out of COVID and, living life and spending money and buying overpriced concert tickets is just perhaps part of our new culture until it's not.
Well, the nice thing, too, is with all the commercial real estate in the really big cities, a lot of people are selling commercial real estate. But in Nashville, Nashville's having a boom. Like today, did y'all hear Oracle?
Yep.
Their headquarters to Nashville.
I didn't hear how many
Austin,
people,
Texas.
but they want to right downtown. Or they've already purchased land.
They've already committed to 6,000 employees.
6,000.
They're just moving their headquarters. But that's a plus for
Which they had
Nashville.
just moved it to Austin, Texas a handful of years ago.
Truly like 5 years ago.
What, from California?
Yeah.
Yeah.
Yeah, it's not like, it doesn't feel like a long-term commitment because they just did it in Austin 5 years ago.
It's good for today, though.
So many people
Great
moved
news for
It's good for
Nashville.
today.
Austin that they had to leave Austin.
Yeah.
I have a question just to, I know we've kind of already talked about this, but I'm curious, do you guys employ any type of, other than diversification into non-correlated assets, do you guys employ any type of, like what I'd call more true hedging mechanisms? Literally like the simple idea of buying puts. Is there just of any sort, whether it be packaged or?
We have on a couple of occurrences when clients specifically came to us and told us there was a stop loss. Generally, it's for collateral purposes. And they say the portfolio can't fall below a certain dollar amount.
Yeah.
In those instances, we'll absolutely do that. We'll work with an options trader and put in that, exactly what you're talking about, buy some puts and just make sure that while you still have this investment portfolio, we can have somebody overlook the full thing and manage it appropriately to limit the downside. We don't generally utilize it because it's not inexpensive to do that.
Have you guys, I'm curious about this, and I don't want to spend a lot of time on it, but have you guys considered the use of like target return ETFs or buffered ETFs? have y'all talked about that?
Oh, we use target
Not target date.
target return
Yeah,
ETFs?
but buffered ETFs, where they've got a buffer on the downside and an upside cap, or structure
We have
notes.
in a few places utilized them.
Yes.
As a general course of action, no, we have not, but selected when clients have come to us with a specific design or a specific need, something like that can be useful.
I guess what I might just say is if that would be something you might put a little bit of, look into it a little bit between now and next time maybe we meet or something. Just the idea of something, whether it be at our level, we can easily build out custom structure products, and whether, our own, really. I mean, somebody, whether it be JP Morgan or any of those would build, UBS, JP Morgan, Morgan Stanley, you go down the list, they would build these things out for us. And because of that, we can kind of make it look like we want to. And it's a lot cheaper than really going out and buying the actual options typically. But like those buffered ETFs, where you got 15% downside protection and a 15% cap, if everybody in here is kind of thinking we're a little bit more worried to the downside at a moment, just carving off a little bit of the equity exposure and doing some of that kind of stuff with it, perhaps one day. It's not, I think right now with the amount of cash we have and the way we're going in, I mean, I'm perfectly happy with what that is, but in 3 or 4 months, that's gonna, we're gonna blink and we're gonna be
invested.
We're gonna be invested. Yeah. And so the timing might work out that if you take a look at that and you see that it makes sense for something this big, potentially, as an option for us.
Okay. Yeah, I'll
love to
take
hear
a
your
look and
thoughts
see.
on it.
Yep, will do.
All right.
Any more questions? Mr. Applegate, anything? Excellent. Mr. Burdick, thank you so much for that presentation. It's very informative.
Thank you.
Moving on to agenda item number 6, our proposed FY 2025 budget. Mr. Tindall, Mr. Brown, not sure who's going to present that.
Yeah, I'll do it. The one in your book, it was good enough to get me another one that is more updated, which I had up on the screen for just a second ago. But I also passed out to you, so you have it. There it goes. All right. So this one shows FY 23, 24, both budgeted and projected, and then 25. And 25 picks up our new agreements and our contractual services and things like that. So pretty standard budget. Those are the differences. The general transfer of the general fund for administrative costs increased by just about what city salaries are going up by this year. That's the only change there. Everything else pretty much stayed either the same, or we recognized what we were doing this year versus last year and made those appropriate changes. So if that budget is good, then we'll work off that.
I did have a couple of things on the budget that I just want to make sure I have my head right around it.
Yeah.
On contractual services, that number goes up a lot. I think I kind of know why that is, but why is?
That was the Marquette fee.
Yeah, the Marquette, and then the investment expense is then going down from 80 to 25. Is that going to be where we've just shifted basically some kind of like commission wherever we were buying stuff, or?
Yeah, so the contractual went up, or the Marquette contract went up into contractual. The investment expense, really what we recognized there was the U.S. Bank fee, the custodial account. So it's 2 basis points. We just estimated off $75 million over the next year, so that's what that number is. It'll probably come in a bit less than that, but
Okay.
That's why that went down, is we just recognized the U.S. Bank fee in there, and that's it.
I got you.
And if you're looking at the one in the notebook that got into the notebook, it's not as up to date, I think, as this one. It might be the same numbers on those two things, but the one up on the board is the more current one.
Gotcha, yeah.
And of course, the distribution is shown in FY25, just an estimate. Well, no, that's the actual amount that's going to go out. Next year, we'll recognize the next year's disbursements from the committee. So this year, the disbursements after July 1st will be about $365. You'll see that on the grants line.
Yeah, there we go. Yeah.
And we took all Tim's projections and committed and put them in there. So all these projections are now on solid paper.
5% return.
Yeah, we did use a 5% return in there just to, it's kind of the city budgeting, very conservative on revenues and a little bit high on expenses, and no one is unhappy at the end of the year, usually.
Gotcha.
Any changes off this, obviously we'll bring it back in the meetings. If we have a material change on the budgeting, we'll bring it back and get a budget amendment.
And the bank service charges, that's going up.
The bank service charges,
Is that where the U.S. Bank? No,
it's not. The bank service charges probably should go away. We shouldn't probably recognize that at all because we cleared out the Truist account, moved it all to U.S. Bank, and they were able to process our bills through that bank account. So we don't need another operating account. We just kept it in the U.S. Bank, and so that 15 should drop out. As a matter of fact, since you brought it up, and I'm in Excel. There you go. It's all done.
that was easy.
Yeah. It's our first budget adjustment right there.
What else is on your mind, Rick?
Woohoo! Keep going, Rick. Just look at expenses, though, don't you?
I'm just going to take my win. All right.
Well, I should defer to Jennifer. Is that all right?
He'll probably get back in there somehow after y'all figure out why you had it in there in the first place later. Like, we got to put it back in.
Yeah, we were kind of, at least I was mentally debating where we should show charges, and we decided, since the custodian is really not an operating account, it's more of an investment account, I put it in investments, but investment expense.
Yeah.
We missed that in our update.
Yeah.
All right. And we need to approve this one?
Yes.
It's in these actions?
Great.
Just a minute before we motion to that.
All right.
Sorry, I'm just trying to make my way through it. Sometimes looking at budgets confuses me. I'm embarrassed to say that as a CPA.
Public budgets are never straightforward as they should be.
Take your time, I'm gonna run some numbers.
You said the interest earnings are assumed at 5%, correct?
Projected at 5, yeah. And that may be somewhat low, but, when Tim gets 9 and 10%, we'll be real happy on that. He's not going to come back. It's going to be Zoom calls and hang-ups next time.
So does Marquette have an investment conference?
We do. We have an investment symposium, is what we call it. Generally in September each year in Chicago. As clients, you'll be on the invite list.
I was just curious.
Yep.
Software subscription, that's an annual payment we have to make for that?
It's annual with, I'm going to get it wrong, what is it?
It's found out.
Found it, yeah. Karen knows it. Yeah, found it,
The Committee on Contributions is using for their grant applications.
yeah.
So we think it's going to be 14 grand annually. Okay.
For the software, yeah, it's 14, yeah, it's 14.5, that's about it.
Yeah, it may drop off because the initial part included training, so once we kind of complete all that training process, that may drop off a little bit.
And it's used not just in the grant process, but we also use it as we, right now we're working on an agreement, so when we disperse it, the recipients will sign the agreements.
Okay.
That are on there, and then we have reporting that comes in on it. So it's, we use it all, we'll use it all year.
Got a good suite of services that comes with it.
It does. It's a nice program, and thank you to Ann for helping us find
We
it.
really like it.
Yeah. Christy Houston uses it and likes it quite a bit.
So and just something just from a bigger picture perspective here, not detail in the weeds on this, but just trying to kind of get I think all of us need to kind of keep our eye on the ball is just really kind of that total expenditure number relative to the account value, and to see, in terms of investment expense and the operating expenses, so to speak, kind of what does that number look like as a total? The 193,000 is very, very small. It's only 3 basis points of a $53 million account. So you get that up to 600,000, you're going to be in the 9 basis points range, plus Tim's total number, which is whatever that total is. What's the total all in? I saw the 46 basis points or something, but
We're estimating 30.
that's internal, right? That's just internal ratio, or is that it?
38 is what we're anticipating for all the managers combined, once implemented.
Plus how much?
38 plus us is 20 right now, so 58.
So yeah, so we're still underneath 1%, pretty comfortably. If you even with adding.
To add 2 for U.S. Bank, it gets you to 60. That's really kind of the all-in.
Yeah, and if we're at the 601,000, well, actually the 601,000, does that include? That includes.
That doesn't include the manager expenses.
That includes yours, but not the internal.
Correct.
So we would really need to just be looking at the 38 number, right?
For investment manager fees specifically, yes.
Yeah. I'm just to make sure. Sorry,
Yep.
man.
No.
The 20 that you guys are charging, is that in the contractual services, Craig? Is that what
Yes.
that number is made up of?
Correct.
Yeah. So if I'm looking at 601 as my kind of nominal number, and you've got U.S. Bank in here too, is the 2% in here as well?
Yes.
So everything's in here except
2 basis points, yeah.
the internal expense ratios of what we own inside of here, right?
Correct.
So really, this is 9 basis points, something ish, the 601 plus 38
9.4.
ish. Yeah, 0.4 is ish. So 9-ish plus 38. So we're only at 47 total, 47-ish. So, which is really good. I think that's really good, isn't it? We're under 0.5% of total administrative and investment expense. That's
And also, if you
Strong.
look at the grants, 364,000, that's the money going out in distributions, correct?
Well, that's the amount going to the nonprofits, and there's a
Right.
distribution to the city.
that's right. Yeah, so that's not even
50% of
expense.
that increase from last year is just money that they're granting out, which is the purpose for this anyway, so really.
Right, that's not even
Yeah.
an administrative expense, so.
Does it all add up to the 5% payout? Does the part that's peeled off for the city first, and then,
The city and the nonprofits are composed of 9%, or 5% rather. So the expenses come out before,
expenses can count toward that too?
yeah. Well,
This is as an asterisk.
do we put expenses in it after the 5%?
They can count toward the 5%.
Yes.
Okay, so yeah. The expenses do come out of the amount that's set aside for, yes, you're right. That's where they come
the
out.
parks and the roads and,
They come out before that calculation, 85-15. So it'll be the 5% less expenses and then the 85-15 split.
gotcha.
Any other questions regarding the budget? I think I finally crunched the numbers in my head, Craig. Thank you all for giving me a minute to think about that. I'd reviewed the other one, Craig. I was just looking at this one a little closer.
That's right.
Oh, that's good. Mr. Stone, any other questions about the budget? Mr. LaLance?
I think it's good. I mean, it's great.
We've come a long way.
All right, hearing none, can we get a motion to approve the budget?
I'll make a motion, we approve the budget, even if Craig has to go back and add $15,000 in the bank.
Excellent, excellent call.
I got
Second.
15 flush. Man, that's good. I like it.
Second.
It's been properly moved and seconded that we approve the budget contingent, also considering $15,000 may be adjusted. Approve, can you respond by saying aye?
Aye.
Those who oppose? Okay. Budget's been properly approved. Thank you.
It'll go into effect July 1.
July 1,
Yeah. Yeah, we
2024.
And the checks go out then to the nonprofits, July 1? That's exciting.
somewhere around there.
Okay. Moving on to item number 7, other business. Is there any other business that we need to discuss? Craig?
Not that I have, no, sir.
Anything going on with the contribution? Anything interesting right now?
They get the summer off. We'll start our next round in September. We'll be back in August, preparing for, I think, around the September-October timeframe to put applications back on the street and start their process over again. They get condensed in that latter part of the year and what they need to do.
Sounds good. Board members, do you have any other business you'd like to bring up during this meeting? Okay, hearing none. Item number 7, future meetings. Craig, you just want to put something out to us? And
Yeah, we can, unless we have some real pressing business, we'll maybe schedule a meeting out towards late summer, early fall, somewhere in there, coordinate everybody's calendars and see what makes sense, and then we can do another check-in on our investments.
yeah, I was going to say,
Is that a
once
good time frame?
Tim has a full report for us, it'd be good to take a look at it. Benchmarks and everything. Yeah.
Okay, good.
Okay. All right. Anything else anybody want to bring up before we adjourn?
We do have dinner over there. If anybody's hungry, we'll get that set up. Don't want you to go home hungry.
All right, 50 minutes flat, just about. It is exactly 5 p.m., and we will consider this meeting adjourned. Thank you for your time.